Okay, hi and welcome to the next video. Today we are going to be talking about something that I got asked last Friday. Basically, I received an email from someone that they said they don't have that much time for trading at the moment. They are basically busy um, with the job and also don't want to kind of have the trading basically as the main thing and want to really be more focusing on this kind of a capturing the bigger moves, this more of a swing trading approach basically. And although there I already talked about the swing trading, what I tend to use this kind of a H4 30-minute approach, basically looking at the H4, if you don't have any bias, looking at the H4 levels, executing on a 30-minute chart. To be fair, this still requires quite a bit of a time actually, because obviously, if you are trading more markets, which this is the kind of the first thing, if you decide to swing trade, you definitely should be trading more markets, and you should also kind of go outside of the scope of just crypto, which is something that most of you trade basically. Because obviously, if you are going to swing trade, and if you are going to swing trade only cryptocurrencies, you will basically be you will very quickly kind of notice that you are all the time in basically the same positions. You are, if you're gonna long BTC, there is quite a high likelihood that ETH is going to set up the same way. Something like Solana will also set up the same way. So you'll be basically in like 3 or 4 longs at the same time, and a lot of people kind of fail to understand that these are highly correlated assets against each other. Therefore, if Bitcoin starts to really drop all of a sudden, your other positions will suffer from that as well. So first things first, if every time that I basically swing traded, and if you take a look here, you can see the Sera chart. You have all the instruments that I prepared for this video. You have a forex majors, which are the 7 markets in here. This 6 EBAN. This is euro, British pound, Australian dollar, New Zealand dollar, Canadian dollar, yen, and Swiss franc. Then I have this kind of overview tab. Then I have ES, NQ, CL, and gold. These are from like a futures, in the index futures and commodities. And then also I have a Bitcoin, ETH, Solana, and Binance Coin. So basically, this makes it 15 markets. They are still highly correlated against each other, but um, the point is that if you would go with this H4 30-minute strategy, which I covered in bootcamp previously, you know, this is still for someone that has the time to kind of track the market whole day basically, because you are taking a look at the market around the H4 closes, but for each of these instruments, the H4 close is at a different time basically. It's not like, there's H4 candle close at 8 and then you can kind of chill until 12, because how it is, I think now, I think like crypto H4 candles closed 1 hour prior to index futures. So, you have this a lot of this overlap, and you need to kind of um, track the lot of things at the same time. So even though you are staying in a trace a little bit, this whole kind of a um, analysis, every day is kind of required. So this is definitely not for someone that you know doesn't have that much free time basically to just stare at the charts and spend at least a couple of hours every day watching it. So I was kind of thinking about this, and obviously this kind of goes even into my kind of a personal trading. I'm still kind of obviously sticking to day trading the sessions that I mentioned previously, but at the same time, as I kind of moved recently, and I'm in a new city. I never lived here before. I also, on the other hand, want to kind of have this ability to to take a day off, for example, or just because obviously the biggest downside of the day trading is, if you are not in front of the computer, there is, you are not really making any money. So, and this is kind of a difference with swing trading, obviously, I can be in a trade, know that I only need to watch it, every couple of hours to kind of manage it. So, definitely you will get this little bit of a freedom. Um, as you can basically do some other things and still be able to capture some moves. Obviously, I don't want to kind of sugarcoat it this much. There are certain downsides of swing trading, the things that I never really been a big fan of. Obviously, the most kind of the worst thing with swing trading for me, and this is something I kind of talk about in a second, is that it's hard to predict the future, like very further out to the future, basically. It's um, I mentioned this many times, and a lot of times online you will see people talking about um, that day trading is just noise, lower time frame charts are just noise. But if you really think about it, predicting something to happen in the next hour is much easier than to know what's going to be, happening in 2 weeks. Obviously, holding positions longer mean that you are more exposed to the news that will be coming in the future days, and so on and so forth. And also, it's kind of this thing that obviously, if you um, for example, let me take a look at some example here. If I can quickly find something, to just give you this kind of reasoning. Uh, these are the Canadian futures basically, and you can see this huge daily candle. This is the high volume candle right here. We kind of took out all these lows, and then started pushing higher. Obviously, if you take this trade on the daily time frame, you are getting long on this kind of a reasoning uh, of this kind of a round support, but it's really hard to kind of think about and justify that. You will be really, let's say you will target this high right here, which will take approximately 7 days, even more, like 14 days almost to take. The longer you are in the trade, the harder it's kind of a justify that, market will only go to this high, which is, quite a big move in the Canadian dollar, only because this support was taken, And on the other hand, if you take something on a day trading basis, let's say this would be a 5 minute chart. This hourly chart, but let's say this is a 5 minute chart. You have to push to this upside, taking out some prior high. You can say that, okay, these people are trapped in here, I will be just betting on this quick flush of delta, targeting this very kind of thin move, because obviously if these people who got trapped here start puking, we will quickly move throughout this kind of a low volume area on this type of chart, which actually happened on the hourly chart. But once again, uh, being able to kind of do this intraday, where you can really say that there is this kind of these are the market conditions today. If this move is not going to unfold today, then it's less likely to happen, because obviously the longer you hold a trade, let's say that you short here, and this was rather quick. This is kind of not the best example of it, but overall longer in the position you are, the longer kind of it gives this room for the new information. Obviously, if you would be short here on a 5 minute chart, chart would be looking like this, and then you would see this kind of a huge absorption here, a lot of sellers trapped here, and some new buyers are very aggressively stepping in. That might be kind of a reasoning for you to just get out. But obviously you don't have that if you are taking a look at the 60-minute chart. So definitely don't take the swing trading as this kind of um, free approach. You will be just trading from your phone for a couple of hours a day, because I would generally say that the overall edge is a little less kind of from this order flow perspective. But other than that, everything works the same. Like I said before, price is still fractal. The same patterns that happen on daily chart will be happening on 1 minute chart over and over again. The price behaviors are the same. I have these kind of high volume candles. You can see where they are still happening at the kind of a reversal points all over the chart. So it's not that different, but still I would say that you know predicting things on the larger scale is just generally more difficult. So this has been just a little bit of an intro. And anyway, so what I did during the weekend, basically, um, I've taken a look at some things, taken a look at my trades that I took on this kind of a swing, from the swing approach, but also took a trades from a day trading approach where I had a basically daily bias in mind, for the trades, and kind of went back and look how these trades play out, and I kind of came up with the I don't want to say a strategy, because obviously the everything from the execution part, from everything that you learn basically in a bootcamp, and how the patterns and everything, it's still the same. I'm not bringing you this kind of a new type of trading or whatever, but when it comes to the overall kind of a approach to the time frames and everything, that's changed a little bit. And the biggest change basically boils down to um, the way that how you analyze the markets for the opportunities. As you can see here, I have a these are 5 charts here. I have a weekly, daily, hourly, TPO, and the footprint chart here. All these kind of a templates will be posted below the video, so you can go and download them. I plan to do more kind of a advanced video on how to use Sierra chart and how I have everything set up, because for example, there are some little tricks, like if I go to file, I am opening these things as a chartbook group, so everything just kind of opens at once, which is kind of these kind of cool features. I will be releasing this maybe most likely next week anyway. So I will show you this kind of a flow map. Once again, this is basically this very much the same template as you have seen before, as I have posted before. I just deleted something. So let me just go quickly through this, and then I will show you this on the chart. One more thing, obviously you can use the trading view as well. You don't need to use the Sierra chart. There is just one thing that I will be showing you in Sierra, where I think it's kind of a good when it comes to the order flow. But you for this type of strategy, you will be more than fine using the trading view. You will be only working with weekly, daily, and hourly charts. You don't need the order flow that much, although it can give you this nice little bit of a confluence in some cases, which I'll mention in a bit. These are the markets that I trade. I don't have a silver futures there, but silver is also one of the markets. I just didn't kind of prepared for that yet. So okay, so about the strategy itself. So basically, the market choice, obviously the forex majors, futures, commodities, and indices, crypto. The strategy breakdown is basically you are trading from daily to daily and weekly to weekly levels only. Markets are monitored on Sunday weekly close and daily UTC close. If there is no setup on a weekly or daily, there is no trade. And the H1 is used for execution only. At the kind of a to build a core position, and then until the higher time frame objective is met. So this is when things can get a little bit for your own interpretation. Basically how this strategy works is that you are only trading if you have a weekly or if you have a daily bias. So therefore you only need to look at the markets at the weekly close, which is on Sunday, or for the futures they close on Monday, on Friday evening, so you can do it anytime during the weekend. And then you need to look at the markets around the daily close candle, which is the kind of a midnight European hours. So that depends kind of where you live. But basically, when every daily candle closes, you will need to go through all your markets for a day and see if you have any kind of a daily bias. One disadvantage with that, obviously, you are becoming kind of a heavily biased, because obviously you have this kind of higher time frame bias in mind. This can be obviously a great thing, but also it can be kind of a bad thing, because if you, let's say, you have a weekly bias, so you are really trying to catch some weekly move in the market, let's say that you have a kind of a weekly cluster, in here, market moved there, spent several weeks there and it's coming back now. You are trying to get long in this weekly cluster, and you will be executing that on H1. You can get some kind of like a false H1 signals, and the H1 can spend a lot of time inside this cluster, because this is a weekly chart. If you hit a weekly level on a weekly chart, it can take like 2, 3, 4 weeks before the bias plays out. So you are coming to this heavily biased because you have obviously the higher time frame weekly bias. But you need to be able to, and this is probably the most important thing from this whole kind of swing approach, you will need to be able to manage your trades, execute your trades properly, and don't get kind of caught up and try to rush things basically, just to get like you'll get stopped out in this kind of consolidation 4 times, and then market will just kind of rally without you, and then you will be looking at the weekly chart saying, okay, this worked perfectly, but I just lost money and wasn't able to execute in that. Also, you will be kind of need to manage your trades properly, and I will be talking about this in a bit on the when we come to these points, because the one thing is obviously catching this bias, but the second thing is also you will need to kind of securing the profits and being able to kind of still make money, because I would say that if you have a, once again, weekly cluster in here, and the market, there is this another weekly cluster here on BTC, let's say, and this thing is kind of like 30%. These things are basically 30% between each other. Let's say that you will execute your trade somewhere in here. It will go kind of like your halfway, and then it's going to pull back all the way back down to your entry, and all of a sudden you are losing money after basically being in a position for like 1 week, 2 weeks. I wouldn't say this is a really good trading. You need to be able to take a trade here, at the kind of the origin where you should be taking trades basically once you're gonna get the cluster retest. But then you need to be able to manage your trade on the way up. So if market starts to pulling back rapidly, you are gonna getting out on a trailing stop, and kind of reconsider the position in the meantime. But in general, and this is obviously very kind of a general thing, if you have a weekly to weekly levels and you are taking, let's say that market bounced here from weekly, and then you have this kind of a weekly failure, you can, you are taking a trade from one weekly level to the next. There are a few things you can do here. You can either, because let's say, and this is the point where I mentioned the bias, obviously you are biased from this area to this area, if this level is getting met, your weekly bias is no longer active, therefore, you are not biased anymore. But anything that happens from here to here, basically, this is your weekly bias. So let's say that you will kind of get in here on this kind of a H1 QM, you will get into the trade, market will go, and obviously there are going to be so many different kind of scenarios, and every trade will be different. But let's say that you will then, in the middle of the move, you will get another kind of a H1 QM with very nice confluence under the low. Well, although you are not trading exactly at the weekly level right here, you have this kind of a bias. So there is no kind of reason for you to not execute another trade here, playing your weekly bias. So you'll be in a kind of more positions at the same time until your bias is met. And this is something that I think is a good thing to do. Obviously, once again, you need to be careful. You are basically pyramiding in your positions. At this time, the stop loss from here, should be at least there, so you are covering some of the risk. It gets a little bit complicated, once you start doing these things, because you will need to kind of watch your money at all times. But this is also the way that, although you are not trading that much and you are obviously just swing trading, so you will be taking just a few trades every month basically. Thanks to this, you will have also kind of a good your account basically can grow quite a bit if you will be able to catch this one huge weekly to weekly move, and you will be just able to kind of pyramid it and compound it all the way up. You will be you will see that very quickly your account can grow as well. The other kind of situation with this would be that you have, once again, weekly level, you are getting this kind of H1 long, and then, the market is kind of going up. You are trailing your stop. I will talk about this in a second. And let's say that you are going to get stopped out here. Market is starting to pull back, and it will hit your trailing stop. So in this case, there are basically two things you can do. Either just wait, for whatever happens next, and just kind of look at the different markets. Or you can come to this and be like, okay, so I got stopped out, but my weekly bias didn't get, met yet, basically. So if I'm still on this underlying asset based, for a long side, let me just wait a bit and see what's going to happen. Let's say that you have some sort of compression here, market runs below it, takes out the compression, regains some sort of high, and you can be like, okay, so we did that. I'm still biased on the higher time frame for a long side. Let me take another long here with a stop obviously here and target the weak level, and market then might go back and take you up there. Or once again, let's say that you will break this kind of a resistance. You have a resistance here, you will break it, you will trail your stop below it, market will kind of come here, take you out, and once again then you can be like, okay, so I'm getting out for a second time. If we manage to do something like this, I will jump back in, but if we not, we not. So the importance of this is obviously, as I mentioned, you need to be managing your trades actively, and this doesn't mean that you need to sit in front of charts all the time. Obviously we are trading 60-minute charts, so, and not every 60-minute candle will be having some extreme importance, but even if you are working, even if you are kind of out whole day, taking a look at the market once in an hour, only obviously your positions once in an hour to manage them is not something that you is not something impossible to do. Even if you're working or whatever, you'll just kind of quickly look at your phone every once in 1 or 2 hours and continue to do anything else. So like I said, you are only trading from a daily and weekly charts, basically daily and weekly levels. So what is this daily and weekly bias? I hope you can see this on the video. Let me just zoom in a little bit. These are the untested daily and weekly clusters with the liquidity gap after the cluster. So, kind of a making these things as clean as it can be. Let me take a look if I can see anything on the charts real quick. Obviously the daily cluster with untested gap is really something that moved a lot. You usually will have these kind of high volume bars, even this, you have this kind of cluster area in here, and then you have this kind of a liquidity gap, this as the ICT traders love to say, the fair value gap, although this is just from something that I got from Paracurve basically a long time ago. This is your liquidity gap, if you will, basically. So this kind of very fast thin move. So these are the clusters. I'm very sure that everyone knows them by now, although I see some of you sometimes post these kind of a basically trying to find the cluster in anything. I would say just this market will just kind of slowly drift down. It will break the structure, and people will often try to kind of look for a cluster everywhere, basically on every move that broke the structure. Although let me just talk about this really quickly, because I've noticed some of you do this. Obviously, basically any kind of like market goes here. Let's say the market goes up, and then you will have this kind of a very slow grinding move, and you broke the market structure here, and I've seen a lot of people just kind of mark out something in there only because it broke the market structure low. I don't think this is the best way to do things. In my opinion, you really need to kind of have this situation where you have this consolidation and then you have this kind of aggressiveness, usually one kind of huge body candle, and you will see that one side is clearly kind of stepping in and market is then holding the new prices, basically, because if you have this, you have this kind of liquidity gap and market is all the way back within the next candle. Obviously this is not form of acceptance, but this is. But really for the clusters, you really want to see those kind of the ones that have this kind of sharp move lower, and ideally you want to see the previous structure broken. But the market structure thing is just a little bit of a kind of a visual help. It's, I think the move itself is more important, and obviously the last thing that I always stress a lot is that you need to have a excess at the top, which you can see, this structure doesn't have. So this is for me, although we have the sharp move, let's say that we broke the market structure in here, this is not a valid cluster that I would trade blindly, because you have these lower highs above it, and you have some lower highs here as well. So you have this kind of a compression. This seems to me more like a flush, obviously. Never a great signal when you just kind of flush and then you start to kind of grind higher. That's very similar to this situation. Okay, that's obviously not what I wanted to do. So very similar to this situation is that when you have a cluster, you have this sell-off, and then the market will just grinds up. When it looks like this, depends, because obviously you are building the compression below it, but you will very often see that these things, often can retake the level. This is very tricky thing to trade. It depends on your higher time frame context in a lot of cases. So anyway, daily or weekly cluster with the liquidity gap, after cluster, daily and weekly failed swing, taking the prior level of compression. These kind of failed swings are interested based on what people kind of made them over the time. Obviously the Tom Dante was one of the first people who popularized the SFP, the swing failed pattern. And he was always, I've seen some of his videos about that, and he was always very strict about the fact that it has to be a deep swing. Basically it has to be something like you have a level of resistance, market sharply sells off, and this is your kind of deep swing. This is this is kind of your deep swing, and then if market breaks below it again, closes breaks above it again, closes below, then this is your swing failure pattern. What this became over the years, and from people, what they kind of do is they every single swing high and swing low, if we trade above, close below, is a failed swing, is the SFP. I would say that kind of a truth to this is somewhere in the middle, in my opinion. I'm not always looking for a deep swings, but for example, you can see here on a euro, on a weekly, you have this kind of a level of SR right here. You have this daily gap, this daily liquidity gap. You have a little bit of a SR here, and then you also took this weekly high, traded above, close below. This is a decent one because you have this kind of a overall contextual level. But then if you're gonna kind of forget about the second that you have a weekly bias here, so obviously the weekly is more important than daily, obviously. So if you, this is something that I didn't mention, but if you obviously have a weekly bias, then you really want to play. These are going to be complicated in a sense that they can take a long time to play out in the first place, and in the second place, you shouldn't kind of forget about it. Basically, you will get a bearish weekly bias, let's say based on this, then your target would be, I would go really for at least these kind of lows on a daily, or even this kind of a daily cluster in here. But what some people do actually, yesterday basically you can see that the euro just kind of took out this low and closed above, and also is formed this kind of a QM here. And you might be wondering, like, if I would take this trade or not. Well, I would most likely not to, and I didn't take this trade basically for a couple of reasons. The weekly objective wasn't met yet. We for, like I said, for the weekly, from the weekly kind of perspective, I would at least want to see this kind of a flat weekly low. You can see, if I'm going to zoom in a little bit, you have this support on this weekly candle right here. We traded below, and then you have these kind of two flat weekly lows. So I would target here at least, and if we're gonna take a look, market kind of just reverse just before that a little bit, and also like this is not enough for me, and this is where the order flow obviously confluence comes in a little bit. You have these high negative volume bars. I don't see it here. The little dots are the script that shows the volume divergence. You have it here. I share this in the chart books. And also for this one, if you will end up using um, the Sierra chart, I changed up the footprint a little bit, which will show you these kind of a volume distributions for the candles. You have a bid and ask on the left side as well, but that's not really important. The important here is just to see this kind of how these volumes are distributed at the highs and the lows. And if these are set on the range bars, basically these are non-time frame bars. For every instrument I set it in a way that it will take around this kind of 1 to few hours to print each bar. But most importantly, you will see when there is high negative delta, you will have the coloring. You will see the important stuff without looking. This is a very simplified version of a footprint basically. But yeah, the main point why I wouldn't take this kind of H1 QM into the daily failed swing is because I am having the weekly bias. I want to be short this market based on a weekly chart. Also, daily took a swing low, below, closed above, but you have just another set of very clean weekly lows right here on the left. So once again, I don't like this really. And you have this kind of a little bit of gap left on the daily chart. You have a daily cluster below. If I would come to the new week with a weekly bias, because obviously the new week opened in here, after the weekly candle closed. If yesterday we would flush all the way under these lows and then form the QM, I would be much more kind of leaning towards the taking longs, because at that point the weekly objective kind of met. Obviously it's a little bit complicated because this is euro, and not you are not only trading the technical chart, but since this is at the parity with dollar, this is a little bit more complicated. So I wouldn't genuinely want to overstay my welcome too long. This is one of the special kind of occasions, but you can see still, this is the weekly chart. And the volume profile on the right side will be your great help. Seeing these LVNs on a daily and a weekly will give you a really nice idea of where the levels of SR is. And you can see, we lost this level and then kind of came back, filled this LVN a little bit. Once again, the weekly bias, we flushed here. And then last week we kind of retested this LVN right here. This is the high volume node edge. You have a support, support here, and we are selling off again. So yeah, but for this kind of a case, I would be really just targeting these flat weekly highs. So this is the importance of kind of knowing your bias, once again, because these failed swings, especially because when you have a cluster or when you have a QM on a daily or weekly, they will be very obvious, but the failed swings will be happening, very often. You have a failed swing, here, for example, and this is also the daily bearish engulfing, which will be your last bias. But yeah, the overall, you have a failed swing here. You will just rush to trade it, even though this candle closed quite bullish. Then you get another failed swing. You have a failed swing here. This one worked. But yeah, these will happen very often. I'm not jumping into every single one of them with the bias. You need to be kind of being able to determine a little bit which ones are the good ones and which ones are not. Daily and weekly QM, obviously this is this kind of a structure. There is one, I think, happening at the moment on the Aussie dollar. As you can see, on a daily chart, the weekly is first of all, in the weekly cluster, quite a deep retrace at this point. But the daily still have this. This is not the cleanest one, but this is the first one that came into mind. We have this kind of level of support here. It's clean on H1 basically, as you can see. This is your QM on H1 on a daily. This could be considered as a cluster. More likely, to be fair. Let me just quickly check if I can see anything right there. But I don't think that the QM is seen anywhere. This one is on the ES, obviously. You have a level of support, you will lose it, make a new high here, you will also get above this support, and then you will kind of retest this level. And this is one of the cases when, you know, like really you have a kind of this cluster area. Once again, if I would go to the little lower time frames, this wouldn't be more obvious, but you know, this meets the requirements of the support, even this is not like the most solid one. Broke below, get above, broke the structure. We come for a retest. You leave this kind of double bottom in here on a daily, and then you kind of come here with a failed swing. So this is type of the failed swing that I'm, you know, all over it basically. But once again, it's giving much kind of a more context than just that. So yeah, the QMs, but you know, it's just a simple pattern that you are going to look within Insight and try to see if you can execute on that. So the next step, obviously, you know, or basically the first step is to ask yourself if you have a daily or a weekly bias. If the answer is no, you know, you are just going to the next market. But if answer is yes, you are going to the H1 chart. What I obviously, once again, let's mention this. If I have a daily bias, my next target is the daily level. If I have a weekly bias, my next target is the weekly level. And the daily chart then can be used just kind of the warning signs. But really, to kind of maximize the opportunity for the and the compounding possibilities and everything, you really need to be biased. And this is the thing that I don't like that much. You know, obviously I love on Twitter, for example, people, you know, love to be, you know, extremely biased and being extremely overconfident with everything they do. But I still have this kind of approach to the market that although I've been doing this for quite a bit, I still, you know, I'm very much prepared to get humbled, you know, if I get a little bit overconfident. So I really try to be as not as biased as I would say, but yeah, for this one you really need to kind of um, get a little bit biased. And also this will get much easier if you will trade a lot and if you will fill your journal, you know, with these daily and weekly biases. You know, once you have the journal full of these, you know, you will be kind of set to you will really get more and more confidence. Basically, you can maybe even backtest these things. It shouldn't take that much time. You know, obviously you won't be finding so many trades, so to fill the journal with actual live trades to the point that you have enough sample size to be comfortable, you know, that you are looking at like a year maybe. So definitely something you need to think about. So, but like I said, if you have a daily or weekly bias, you know, you will go to the H1 chart. All trades are executed with higher time frame bias move. The higher time moves can be used as bias for H1 pattern even within the move for the new position compounding. This is something that I mentioned. And always watch the underlying risk and manage trades on H1 axis. So this is just a schedule. I put very simple things here. I think if I would do this and when I will start kind of doing this, I will basically do this part. Then you can take, you know, in the morning, basically, if you prepare the night before, I think the morning won't take you longer than 1 hour to kind of go through overnight session and set your orders, adjust your stuff as well. So you can be really done here within the hour. Then you can take a break. Generally, I would say back around after the lunch, you know, and you should maybe once again put around this 1 or 2 hours coming into the US session. If you are at this time in a work, obviously nothing you can do there. Only thing, not being able to be at the charts like immediately is the downside is basically if you will be trading the failed swing, which is required to use the market orders. But on the other hand, you know, if you will set the alerts, you can still execute that from your phone. It's not the best thing to do, but you know, you can do that. So but I would say also that, you know, if you don't have the this pro setting on the subscription on TradingView, you know, your alerts here are going to be your best friends. Basically, you know, let's say that you are looking to buy Bitcoin, you know, now we are playing this kind of daily bias. You know, you can see you have the failed swing above the resistance, and we are pulling down here. So, and let's say that you have this little bit of liquidity gap, we filled just tiny bit, so let's say that you want to be buyer below the low. You will just kind of right click here, basically add the alert. If you are trading the hourly chart, basically you can get the notification on the app, you will get the email, and the alert is going to be the opportunity, and here is buy BTC if H1 takes the low and close above with high R-wall. Something like this. If you will do this enough beforehand, and you will be prepared for the situations like this, let's say obviously market is quite far from it, but let's say that we will be trading at the time you are doing your evening prep somewhere around here, so the possibility of the move on the next day is quite high. If you will prepare for things like this, then you will just get the alert, you will wait until the hour candle will close, you'll open your phone, execute the trade, and you are kind of done. So this is, I mean, the day trading is really based on a lot of kind of information that is kind of happening at the moment. There is, I would say that for day trading there's quite a bit more of a discretion coming in, but you can really do, like, for this type of strategy and overall for swing trading, your kind of preparation is the I don't want to say 90% of a job, because obviously the execution of the trades is extremely important, but in the most cases you will be using limit orders, and if you will be coming to the areas like this when you need to use the market order, you can still prepare well ahead of it. So really the time that you will spend preparing and getting ready for the different possibilities is the very crucial one. And since you are trading on the daily and weekly charts, this is not like you need to readjust and check every 1 hour or so, because obviously your the time when you decide if you will trade the instrument for the next day or few days or few weeks really comes at this kind of way. You can see that BTC in my time closes as at 2 a.m. Obviously I'm not going to sit here until 2, but if you do it on midnight it's completely fine. But something like gold closes at 11, so you can do it in the midnight for the 1 hour, prepare for the next day. And basically before I go to sleep, obviously we all live in the different places, but when I will go to sleep, in my case, I will know that if for example, the Euro USD is something that I need to pay attention to for the next day. Because if I don't have this daily or weekly bias, it's not my concern what is this going to do until there is a new bias forming, basically. So this is the kind of a very simplified schedule. I think you can spend even less hours. What I feel like is the best thing to do is just kind of give this like 1 or 2 hours throughout the day, like every 4 or 6 hours. So you will kind of still keep an eye on the market if that's something that's possible to you. Also, sorry, I mentioned the last daily and weekly bias, which is the counter trade, the counter trend daily engulfing bar. You all know what the engulfing is. From my experience, the best ones are the ones that will be that will reverse the trends. Bitcoin looking like shit. You start the consolidation a little bit, you will have a daily engulfing candle right here. The bullish engulfing candle takes the prior day low, closes above the prior day high. So this is your engulfing. You will get the entry next day on this wick. Basically, the same thing I think happened in the ES or NQ. Not, yeah. You have one here. So it's selling off. Your first sign is you are breaking the structure. Basically, you will have a QM entry right here. Although for this, I wasn't trading this. I was traveling at the time. But you can see that you make a low. You get above the high. So this is your QM structure. I know based on how I do things that I would be, stalking this low basically. For my QM entry, and I wouldn't get the entry here. Okay, so you can see, take a look. If you're gonna take a look at H1, I would be basically coming to see that, okay, this is this level right here is basically part of this huge daily QM, but considering the fact that we have quite a bit of compression in here, I want to see this low to go before I'm going to take any longs, and this is not going to happen, which obviously is it's kind of a normal thing. Obvious downside to this is that if you miss a day trade, the next one will be there in a couple of minutes or maybe a couple of hours, but if you miss trade like this, if you miss the execution here, you might not get another entry until basically the move is done. So you need to be, once again, is kind of a physically prepared for the fact that I might miss the whole move, or I will need to wait a couple of days until we form a new pattern. In this case, you go to this daily bullish engulfing, although this wasn't once again optimal. You have this kind of area which you have engulfed, because you can see you have these high lows here, and I really am not the biggest fan of these, but the index futures especially tend to leave them. And you have this, as if you can take a look at this closer, you have this H1QM. Also, this can be considered the H1 cluster. Considering the fact that you have really high volumes executed in here, I would most likely take the trade. Although we didn't took these lows, we at least kind of really took this low here. So you have this kind of excess here, I would say. You took this compression, you took these lows. This is the place where the discretion comes in, obviously, but it's still, you have this daily bias, so even if you are a little bit iffy on the H1, then obviously the daily bias makes it kind of easier. Let's say that for this example, and I will kind of take you through the step by step. Let's say I would target this high, although there was this kind of triple top, and if you kind of keep up with my Twitter, I talked about the ES coming for this eventually. So this is one of the trades where you can really capture the huge upside if you really believe that we are going to take these highs here. But even for this one, obviously your kind of a core position in this case, and once again, you are just setting your limit order. The stop below, I would use this as QM, something like this, target here. So this is 10R, which seems kind of crazy, but it's a daily trade. So if you manage to execute it, and even let's say that you are kind of a little bit of a stressed out about all these lows, so you can put your stop here, and still this would be a 5R. But let's say how you would manage it. Obviously you're gonna get filled. We do this looks terrible, but not much you can do about it at this point. But then we kind of start pushing up. Where I would move my stop in the trade basically is, because a lot of people, what they basically do, and I mentioned this as well, in the past, they just kind of do these higher highs, when in a trend, moving their stop at the most obvious places. But obviously this can get you stopped out a lot of times. So I'm waiting for these kind of excesses, and either if this is H1 chart or 5-minute chart, this once again doesn't change. So I would move my stop loss for the first time right below this low, because we made this little bit of excess below the prior low, and also we flip the SR. Then you're gonna retest it, move higher, and I would say that in this kind of scenario, it would be I would move my stop here, but only after this would happen. In all this move higher, I would still be kind of with the stop at this point down here, because obviously if you once again break these highs here, although there is not any kind of excess, but I don't think the market has any kind of business to go there, and you have a small excess right here, so you can really go with your stop there. Then you make a pullback. I would probably not move it that much, but your evolving R is going to start to suck a little bit. In this case, let's what I was targeting. You're targeting this. So from this kind of a 7R or 10R trade or whatever it was, you are basically getting to this is 2R, so this is still fairly decent, sorry, it should be like this. Um, yeah, it's still fairly decent, but then when you are going to push higher, and you make basically the excess below these lows, then I'm really going with a stop there, and I would eventually get stopped out, before the entry got reached. But if you would stretch this target and go for all the way higher, once again, this I wouldn't be looking to short anything here, although you have the H1 and H1 failed swing, you are breaking the structure here for a retest. Basically, I'm not going to get short because my daily target didn't get met, and very aggressive entry here, but you have this small H1 cluster here basically, which kind of broke this level. You have the gap here as well, so you could finish this move. With something like this, although like I said, very aggressive trade, but possible to take. It's in line with your daily bias, and you are just kind of waiting for the new H1 pattern to happen. But I hope that you can see that, although it's, first of all, it's very important to manage your trades and not just kind of round trip it, because this doesn't mean that it has to work out in 100% of times. And this is the issue with, if you have a daily bias, you can start thinking immediately market is going there 100%. 100% is going there. We are so taking these lows. This is like definite things, but market can very easily come here and just roll over and die, and never take these things. So you need to accept this kind of a uncertain outcome basically every time, manage your trades every time. But if you then you get a pullback, like I said, I'm not going to short this, because even if I take a look at daily time frame, you might think this is a daily cluster, but for me, these higher these lower highs here, this will be excess once again on showing here. I'm not going to blindly short this. This is not structure enough for me to make a bias for the short side, so I would rather sit out. And also, obviously, you are pulling back inside this daily cluster here as well, so you can even, I didn't notice this, but you can even become a little bit more aggressive here, although I don't know how I would execute this section, to be fair, because obviously you will have a sell there. The only thing you can do is just go with a huge stop all the way down here, just execute this. Not sure if I would do this, to be fair. Then you make a V reversal and you kind of start stagnating at here, so this is not your best one, and then this just kind of pops. So really the aggressive entry here towards the highs would be the best case you could do. So, but I hope this was enough explanation to you, so how to kind of play these things, how to play these biases. And you are trading basically the three entry patterns on the H1, and you all know these, so I won't spend too long with this. For limit orders, you are using clusters and QMs. Once again, the most important thing for me when it comes to the cluster has to, let's say that you have a level here of resistance, then you make a cluster, you break the level. First of all, cluster should break this market structure, should make a new high. The candle really needs to be this big body candle, the liquidity gap. If you will slowly grind above this level, this is not a cluster for me, because this is just a compression at this point. So cluster, you really need to have this fair value gap, liquidity gap, whatever you want to call it, from the level. That's very important for me. And the last thing, and this is basically the one that will determine if you are going to use the limit order or not, is if you have an excess below or above. And once again, the cluster with the excess looks a little bit like a QM, because before the move launched in here, you took out some last kind of a swing low that was below there. So you will have structure like this. So this is your cluster with excess. In these cases, limit here, stop here, and you don't think about it anymore. Then you have a cluster with decompression, which lines something like this. This is not a level because you have these higher lows. I'm not putting the blind limit order in. I'm waiting to see if we can take anything there, maybe for something new, and play the continuation from that. Okay, the QM the QM is basically, the QM is one of those that, because obviously the daily cluster, let's say that, let me just draw this once again. I don't have an example for this prepared, but let's say that you will have basically, you will take a look on your daily chart. This is your, you will mark out the cluster. The daily once again needs to, first of all, the daily needs to look like this. Basically, the daily cluster needs to look like this. There has to be access on a daily. If there is no access, I'm not considering to be a daily cluster where I would even kind of go and look for possibilities to put a blind order in. Let's say that you would have really this kind of a double top. I'm sorry, I'm just kind of trying to figure out how to delete things. Oh, nice. If your daily cluster is, looking something like either like, this, or if your daily cluster is looking something like this, then this is not a great daily cluster. Your daily cluster or weekly cluster has to look like this, first of all, to be able to even be like, okay, this is a cluster where I will trade. But if it does, then you need to go to the hourly time frame. You will need to go to the hourly time frame and basically look inside the structure. And if you will once again see that hourly inside, and this is your fractal nature of the price, if your hourly inside the daily cluster looks like this, you are not going to, really go with the blind limit order. But if it's going to look once again something like this, and you will have the high, this is a great for just put a blind limit, stop above the high, and sell the lower. What is important here also to add is that, let's say that high of the daily cluster, let me change the color first of all. Let's say that your daily cluster structure is looking something like this, basically. So you are entering inside, but your overall daily invalidation is all the way up here, right? Like, you are trading a daily level with the cluster that has the access on the H1, so it's all good. But you are also kind of a double the distance from the whole trading idea being basically invalidated. We can really, the H1 can really move there, take you out, then sell off, and your daily time frame looks like this worked perfectly, but you wasn't able to execute. What I think here is the extremely important. Obviously, you cannot avoid this all the time, and if this is just a daily time frame, obviously, this looks like this. This is the daily time frame. Of course, you can just place your limit order here on a daily at the start of the cluster, stop above the high, but obviously you will just do this. Your next daily target will be here. You are looking at like 1-to-1. Oftentimes, maybe 1-to-2 maximum trades. So if this is fine for you, go for it. But I rather prefer to kind of maximize the possible rewards using this H1 time frame. But yeah, if you have this kind of a small H1 fractal inside, and your stop goes here, you need to be prepared that you might get taken out and form something again here, and then you will continue lower, which basically, if you will get taken out here on the H1, is not going to invalidate the overall idea. Because of that, I always like to take the trades that are the closest to my higher time frame invalidation. The same goes for this H1 5-minute that I trade. I'm trading H1 patterns and H1 levels, therefore I want to be in from the H1, the closest to the H1 invalidation. So for example, if we have a daily cluster that looks like this, and this is this huge area, and all the way down here where we basically started the sell-off, you have this H1 kind of a fractal cluster here as well. Very often, since this is like a huge distance from your daily invalidation, basically, I'm going to skip this, okay? And I'd rather wait, and if this is going to retest and then confirm the breakdown, I might just jump in later. But if the area is big and you're kind of you really see the entry right at the beginning, with this whole kind of, because there will be something here, there will most likely be some sort of compression here, there will be something here, we might come there to test. So definitely the deeper kind of tests that come to closer to your invalidation, like the deep test with, high volume pickup, very thin candles coming into the level, these are the best one, rather than just trying to jump in the first level you can see on the H1. So this is something that definitely takes a little bit of time and practice, but I hope you understand the point. Stop placement above below high on 60 minute, make sure to not placing stop into the compression on the next 60 minute levels. So like I said, there might be a situation where you basically, god damn it, there might be a situation where you will see something like this on H1, you have your cluster basically. So this is not what I wanted to make. You have your cluster basically here. This is part of the daily structure and your daily kind of stop. Your daily invalidation is basically here, and you will kind of see this, and you'll be okay. We made a little bit of excess above this high. This is definitely fine. But then you will look to the left, and the rest of the H1 inside the daily cluster looks something like this, with this huge compression, or you have just like the most obvious, double top, and you will look at TPO and you will see the poor high from the previous day, and so yeah, you need to make sure that you are not stopping out at the next 60-minute level, which can get taken. Or if you have one last example of this would be if you have, this is all once again within the daily level basically. Let's say that you have a structure something like this, and let's say that you have a structure that on H1 looks like this. You have a first daily cluster, and then you have the second one which wasn't tested before, and both of these made some sort of excess above the prior H1 swing high. Market is coming back. Which one I am going to go to offer? I will do this one. Although we can test this one and sell from there, I am definitely not going to go short here, put my stop above that just to get taken out and see the sell-off. Obviously, you can go short here, put your stop above there. But very often, I really like to take the trades where I know that I am getting very good entries with tight stop losses, and I can really maximize the most from it, and also being the closest to the daily invalidation. Because if you feel, for example, sketched out with this trade, obviously if you will execute here and you put your stop at the daily high, this is a huge stop. But if you kind of feel iffy about it, but you will manage to get in here, putting your stop above the daily high is not that big of a distance. So this is why I really prefer to be patient and rather miss a trade than just kind of taking the entry that I don't want. Obviously, this is a little bit easier when it comes to day trading, because there is a kind of few trades to take every day or every week. With this situation, this can be really hard on your psychology, so you need to be prepared for that basically as well. Anyway, target must be 2R from entry. I always take the trades that are above 2R. If it's like 1.9, I will take it usually. But I still, and definitely for this thing, you will be getting more than 2R trades very easily. With this approach, if you have this daily, weekly bias and execute on H1, I'm very sure that almost all the trades will be above 2.5 R basically. The target next daily, weekly, first trouble area when trade can turn against, simple, and trailing stop loss based on 60-minute structure being too aggressive results in getting shaken out. Wait for the 60-minute inside the failed swing inside the move. Like I said, super simple stuff. People that trade simple kind of market structure, use the stops like this. If you are waiting for something like this, you are getting much smarter trailing. There is one exception for this, obviously, if your evolving R sucks. So if if you take long from here to here, and market is really kind of moving in this very classic, manner, and this looks like it's going to go to hell every second. And let's say that your last access was kind of like here, so your stop is there, and you are this close to your target, with your stop being obviously all the way down here. The evolving R sucks here, so I am getting more aggressive and trail my stop loss more aggressively because of that. I'm not gonna give this all the way back to see the market turn before the target, basically. Yeah, so look at the evolving R. The failed swing, this is the only market order type, and it has to be the key daily weekly swing point. Wait for the H1 close. Candle must have the R wall to be viable for the market order entry. Simple as that. Or it has to have this kind of a, if you will be using footprint inside the Sierra, it has to be these kind of a B shape or the P shape distributions, where the candle is going to close at the top, the most volume is traded there, so this is obviously the long scenario. Or for the short, the most volume is traded there, candle is closing all the way there. So this is your absorption on the footprint. The high relative volume for the trading view is very often just enough. Wait for the H1 close. I'm not the biggest fan of candle closes, if you follow me for a bit, but for this case, to make things easier, really wait for the H1 close. You are not going to, it's not, it's not going to make the huge difference if you want, I would say. And you are bringing this kind of a systematic element basically to the trading. One kind of potential, one kind of thing that I would consider to be a failed swing, which a lot of people want, is you have a level of support, market, bounces from this one time, you come to the level again, you will go there close below the level, so the candle looks like this. It has a high R wall, so you have the hourly close below the level. So with the high relative volume, if you take a look at the footprint, the volume is this B-shaped profile, and the right next the H1 candle is going to close back above, with the buyers kind of being here, or that's not really that important, and also has the high relative volume. So these two high relative volume candles, back to back, one closed right below the support, everyone lured to the short, all the breakout traders are in. The next one right back above on the lower time frames. Obviously, this is your V-shape reversal. So this is what I consider to be a failed swing as well, compared to kind of this traditional one where you have a candle, you go here. Okay, this was not what I wanted to do. You will do this, and your candle will basically look like this with the wick. Okay, so this is for me the failed swing as well. Target 2 hour from entry, at least the next daily, weekly first trouble area where trade can turn against, and the same trade, same management as with the previous one. One word about the pyramiding, which I didn't mention, obviously. Where we have this? Okay. One word about the pyramiding is that if you will buy your, what is this? I'm sorry, my bad. Let's say you will buy the H1QM, and you are still in a trade, so you are risking 2% per trade, which is something that I'm mentioning here. I will talk about this in a second. Trade is going to go your way, and you will get the next H1QM here. You need to kind of think about this for a bit, because obviously there are few options. If you are really new to this, I would just stick to just managing one position, so you will just move your stop there and don't do anything else. But you can also compound this, and there are basically two ways how you can do it. You'll be executing basically the new QM within this kind of a daily move. The first one, obviously, will just add here, and all of a sudden, if you wouldn't move stop at all, you will be risking 4%, if market would go all the way down here, but that's not really a possible thing. But if you move your stop here, you'll be in slight profit, and then if this is not going to work out, If you are obviously over 1 hour on your trailing stop, then you are getting out. You know, if this something like this would happen, then you are basically going out break even or small gain. You know, obviously if you're trailing stop that you already moved, and I always recommend you to do this, because something that I wouldn't personally do is that, let's say that I'm going to execute this QM here, market goes my direction here, and then it's gonna go back to the entry and the drawdown. You know, obviously this time my stop is still there, and makes this kind of previous one the failed swing. This is not where I would add to the position, because I am still at the entry. My original stop didn't move. You know, we are very far from our daily target anyway. So this is not the place where I would add to the position, which would put me at the 4% risk immediately. But if this one already moved 1 hour from your trade, from your entry, then you are basically, and I hate to say this, risk free in terms of that you cannot, you know, lose this 2%, because obviously you are just risking. You are basically risking what you made. You know, you can either just trail your stop, wait if this is going to go higher, or you can add here. You know, you will be in with a much bigger position, but if your invalidation gets hit, you know, you are basically going out on break even or small profit. If you are under, you know, 1 hour on a trade, if this would be, you know, less than a 1 hour move from your core position, and you will add once again 2% with a new invalidation, and you will get stopped out, then you will lose a little bit of money. You know, it depends obviously how much you move from there, but let's say that this was just half hour, you know, from your entry to this point, you'll add 2%, you know, in this new position. It's not going to work out. You are out for minus 1.5%. So this is something you need to calculate very well. You know, this whole pyramid approach. Like I said, if you are new to this, just don't do it. Then slowly try to add. And there are some other things. You know, this is just the usual thing that I have. 10% risk per strategy. You know, if I take 10 QMs in a row and they all gonna get stopped out, or in this case only 5, I would probably do like, this is a little bit too conservative. I would do something like this, most likely. If I take 10 QMs in a row and 10 of them will kind of stop out, you know, 2%, then something is wrong. So I need to reevaluate this kind of a single setup. Or if the whole account goes, you know, 30% to the drawdown, then obviously you are doing something wrong, because that means that you lost 15 trades in a row. So that's kind of not the way to do things. Drawdown. Okay. I am taking, let's say, here. So this is different a little bit for each setup. For the failed swing, obviously, I didn't mention this. You know, your stop loss. You know, let's say you buy here. Your stop is below the low. We shouldn't make a new low. In any case, you can give it a few ticks, but obviously you will usually just take a full loss on the failed swings. You know, there is not much of a structure. Everything is happening much faster pace. You know, much kind of higher volatility. If you are wrong on a failed swing, you are usually taking a full 2% loss. But for the clusters and for the QMs, you know, it doesn't really have to be always that. Something that I do, you know, I'm gonna take a QM, entry here, and let's say the market goes against me, and the retest this thing from the opposite side, and start, you know, this is where I would get out. I genuinely get out from the trade where I can say that, okay, this structure looks like I can also be short at this point. For example, you have a cluster. You're gonna come into this thing, right? It's class me. Okay, you have a nice looking cluster. In here, you're gonna come there and do something like, you know, this basically. Okay, you move outside of it, you will see some sort of absorption here. You will have a little bit of SR, you will form the QM inside. You know, this is for me signal like, okay, let's not hang around and see if I'm gonna take a full loss. I'd rather once again wait after we kind of reclaim the previous structure and then get in. So if you form a new structure inside your trade, or if you just can take a look at the setup and be like, okay, I can see the reasoning for taking a trade for the opposite side, then it's time to get out basically. Drawdown, this as I mentioned, after stop loss, after getting stopped, new valid setup has to appear with all valid criteria. Never revenge trade, just kind of wait for things to come to you. You are trading H1 chart, so there will be plenty of time for your new entry. And the pyramiding, I talked about this. The underlying the original position must cover the risk, and new risk is not exceeding the profits. So like I said, you need to have this 1R lock basically, or I would recommend you to have this 1R locked, so you are not kind of jeopardizing, you are basically not turning a winning trade into a losing trade because you are getting too aggressive. Okay, so this was a long one, but we are finally over. I hope I was able to explain everything in quite a detail. I will share these Sierra chart books, but I know most of you won't use it anyway. You will be sticking with TradingView, completely fine. Indicators, I have this FVG Nefusem. As much as I hate it, the name, it does what it's supposed to do. It's showing these liquidity gaps, so they will be very useful for you to finding a cluster areas, like here or like here. So it is what it is basically. The volume extension Z-score is above 2 standard deviations. It's coloring the candles. This is for what I talked about. I have the watermark here for whatever reasons. Some things that I don't have in TradingView and I have in Sierra. First of all, I have a visible range volume profile, which you should have for daily and weekly time frame. So you will go to visible range volume profile. You're gonna add this thing here, minus obviously set like this. We'll put it in the right. You can do it a little bit bigger. So you will see your LVNs and HVNs. This is going to give you very nice idea of these edges. I still look at these. I got asked by about this a little bit ago if I still use the composite volume profile basically as I covered in the bootcamp previously, and I still very much do. I just don't go with marking out every single HVN and LVN, but this is such an easy visualization to see what areas are markets very likely to go through quickly and where they are going to likely to stop. So yeah, definitely. And you can also on the TradingView do this basically, so you'll set only the days, weeks. And so if you're gonna go, I have a 24-hour chart, so obviously this is not going to work, but if I'm gonna go to the day one, I will have it here. If you use the 24-hour chart, which actually is going to give you the accurate daily closes, you will just do something like this, and then you'll type this, and you will have it here. But if I'm gonna go to the H1, it's not there. So this thing I have here from Sierra, the yearly VWAP, simple stuff. Indicators, I'm gonna go to VWAP. For this type, I'm not using any kind of standard deviations or anything like that. Basically, I don't really I'm not really sticking to this. This is much more kind of a price action, approach rather than, going with the standard deviation bands and looking for these kind of rotation and everything. You can try to implement it maybe to your system, but I'm just sticking to simple yearly VWAP. It's a good kind of a indicator. It's kind of like a moving average, even if you want. And you might know that I'm not the biggest fan of classic indicators. I never really found much of success with them, but I know people that they do, so it's not like I'm strictly against using that, but it's just never something that I use much. but the on a daily and weekly chart, 200 and 150 moving averages will be kind of a key levels always, because this is the yellow line, and you can see how the VWAP got basically almost ignored, and the moving average is giving you much better reaction there. So these are just for kind of a extra confluence. You will like the 200 moving average on a daily. Last time it got hit, it was 4 months ago, so it's not like you will get these things tested um, every week or something. But once they did, and especially after such a long time, you have this triple top here, you have this is, I think, weekly gap here. Yeah, this is a weekly gap. This is really nice kind of level of confluence for that. And the last thing that I have on Sarah, which there is not on TradingView, on the hourly chart I have the prior week's lows and highs, and on the daily chart I have prior month lows and highs. There is a spaceman indicator for that. It's this one. Okay, so you can go and play around with that. I'm not going to do this in this video, but this one will help you plot the last week and last month highs and lows. Okay, that's it for the video. Thanks for your attention. If you have any kind of questions, I know this has been quite a long one, but if you have any kind of questions, just let me know. Okay, bye.